Hello guys, I hope everybody has seen my Nifty expiry video which I have uploaded very recently, in which I was explaining about the Gamma Blast. Okay, because I got a lot of messages on Instagram and many other people responded me in a very happy way that they got benefited from that video, and I'm really happy for that, to know that. Okay, because I was explaining Gamma Blast and they did really well. After seeing that video, they did really well for the Bank Nifty expiry, that's on Thursday. Okay, so I'm really happy to know that, guys. And guys, in that video I didn't explain you how to select the strike price to know the straddle breakout, but here in this video I'll be explaining that also along with the Gamma Blast explanation. Okay, so guys, it is technically it is a more technical kind of video, so some of you will face some difficulty in understanding it, and if you face so, please watch the video again so that you can understand it better. Okay, so now please watch the video. Hello guys, I hope all of you have done really well on today's expiry. It was a very good expiry. It gave one side move after the breakout. So there was a perfect consolidation in the first 5-minute candle range. You can see the first 5-minute candle, and then here there's a consolidation, and then there's a breakout. This was giving a straddle breakout also. And if you have watched my previous day video when I made a 5 lakh profit on the Nifty expiry, I have explained how I made it with the Gamma Blast. I've clearly explained about the Gamma move there. I'll explain slightly more in advance in this video. So I got a lot of personal messages on my Instagram saying that people got a lot of benefit and you were able to capture this move because of that video. So hope you got some benefit out of that video. I hope you might have taken the trade once you saw the breakout of the straddle. So you can see here when they gave a breakout here, okay, you can see there was a clear breakout in the straddle as well. So look at the way straddles are going on. Last video also, if you check, you can see exactly the same way. Straddles was like this, below 20 MA, below VWAP. It was like this, it was like this, it was like this, it was like this. Please go and check the last video, and then you got a breakout. And what you see then, there's a one directional move on the straddle. But what's the difference? Last time when I explained that video, it was a straddle breakout, but there was a down move. So we need to look at the put. Now there's a straddle breakout and it is an up move. Straddle means selling call and put. So straddle breakout means one of the leg, one is moving faster, one is going to move faster. It could be either call or put. Looking at this, you won't understand that. One is going faster. So how will you understand that? Looking at the chart, you need to understand that it is the call side. Now you are expecting a gamma spike. We are getting a lot of opportunity. R3 is breaking. Now remember, R3 and EMA, 20 MA is very close. So it is easy to take a support at 20 MA. So don't take a put trade here when the EMAs are very close to R3. Same way if you say VWAP is also very close to R3. So there's a high. If you take a rejection trade here, there was a very good support possible, right? We have a VWMA, we have a super trend support, we have a PSR support, we have a VWAP support, and we have a 20 MA support. When all these supports are there, avoid taking Camarilla rejection trade. Okay. So I hope that point is very clear. So please remember that. And now looking at my trade, okay, the profit, I'll come back to the profit. But before that, let me explain this concept. So straddle breakout. So now guys, one more thing that I need to make you very clear is that I just want to go slightly advanced. There are different types of straddles. Straddle means selling a call and put of the same strike price. Okay, so if I'm selling, let's say 45,000 call and put, you can say this is far, far away. This is also straddle according to the definition. What is the definition? Selling a call and put at the same strike price. Okay, if I'm selling 46,000, which is also a straddle, 47,000 call and put I'm selling, that is also a straddle. Okay, so strangle means if you are selling out of the money call and put, then you can say it is short strangle. And if you are buying out of the money call and put, then you can say it's a long strangle. Okay, I'm not discussing about long strangle, which is of no use anyway. Maybe 1 or 2% situation only it is useful. But remember, straddle means selling call and put at the same strike. Now, there are different types of straddle. There can be directional straddle. There can be non-directional. Normally, when we talk about straddle, it is non-directional, which is ATM straddle at the money. What is at the money? Now, if I'm talking about this, 46,186 is the Bank Nifty. 46,200, which is near as 100. This is the at the money strike. Okay, nearest 100 is a at the money strike. If I am taking this to strike price and selling this to, what is the definition? Selling a call, selling a put of the same strike price. Perfect. And that is exactly the case. So I'm getting 680 as the premium. This is a non-directional straddle. Why? Because it is at the money where the delta is 0.5. Okay. Delta is 0.5. That means this move 50% and this move 50,000. Then underlying make a movement. So here the delta is neutral. But I can go directional straddle also. Let's say my view is bullish. So I can go where put strike is in the money. I'll show you an example. My view is bullish. I'm expecting this is going to touch 46,500. Now it is at 46,200. It is to go and touch 46,500. Then what I can do is, now it is here. So instead of selling this, I can do one thing. I can go for 46,400. Call and the put. So as per the definition, you have the same strike price, you have a call, you have a put, you're selling this. And the premium collected will be different. Obviously here slightly higher. But what is done here is, if you see put strike price costs you higher compared to this. Why? Because put you're going in the money. And why are you going in the money? Because you have done some technical analysis and other things and you realize that market is bullish. So you're going put in the money. So okay, you're expecting market is going to close above 46,400. So this is going to become, useless. So this will expire worthless. So that is why you can go put in the money. Now let's say your view is bearish. You're expecting market will close, let's say, below 46,000. Okay, or 46,100. Then what you can do is, you can, let's say, you can go for 46,000, call and put. Now here what happened? Here what happened is, when you go for 46,000 call and put here the call is in the money. Now in which situation you'll go for call in the money? You'll go when you're in bearish view. What is the expectation? Somewhere around 46,000. Even though now it is at 46,200. So it will come down and it will close somewhere here. So that is your expectation, and that's the reason why you're going with this. This is the straddle, right? 46,200, 46,200, same strike price, call and the put you're selling. But this at the money straddle, which is non-directional. But this is also a straddle, same strike price, call and the put. But here, put is in the money, which is directional straddle. What is the direction? Here, bullish view. Okay. So when you have a bullish view, you'll go put in the money straddle, and call, you go out of the money straddle. Because you have a directional view. Okay. Your view is bullish, so call, it is better to go with out of the money call. Okay, so here if you see, you can see you're selling again the same strike price, call and the put. So this is straddle, but here call is in the money. Now why are you selling call? Because your view is bearish. Call in the money because your view is bearish. So first one I discussed, non-directional, and this one is bullish. This one is bearish. Now think about the situation. Who will get most panic here? Out of this three situation, non-direction is there, bearish is there, bullish is there. So who among this will get panic more? The bearish one will get panic more. Why? Because you are getting a breakout. So his view is bearish. He is expecting market will go down. So what he did? He sold in the money call. Because he is expecting market will go down. But market is breaking out. So among these three, so you saw the profit anyway now. I was thinking that I'll show this later. It is 1,07,000. Anyway, so among these three, what I was saying is, this is non-directional. What I was saying is, this is non-directional. So he can relax some more compared to the one who sold in the money call. Okay, he will get panic first. In the money call, he sold because his view was bearish, and the first breakout itself will get panicked. So when you look at this straddle, either you need to look at the money, or you need to look at one in the money. So you need to see where is breakout coming. 12.9. Okay. So 12.9, what is so the breakout is coming at, let's say, let me look at the chart. 12.9. So this is where is, yes. So Bank Nifty is around 46,700, right? So this was a high yesterday. So this was breaking out. So 46,750. So 46,750. Now you have two options. Either you can look at 46,700 or you can look at 46,600. Who will be more panic? 46,600 guy. I hope you got this difference, this example. So this is the bearish view. So this guy will get panic first. So 46,600 guy will get panic first. Okay. So let's look at the 46,600. It will be, I'm just adding that here. Okay. That anyway becomes 0. That I'll discuss later. So if you see here, what is not 46, I need to add 45,600. Sorry. Yeah, 45,600. Sorry. So this is the one which we need to look at. So now, how will I capture this move? First that I need to discuss is it is breaking from VWAP. So this is the most important point. First is breaking from VWAP. Now look at the straddle chart. That 45,600 straddle. Okay. So 45,600 straddle. Why I'm looking at 45,600 straddle? I can also look at 45,700. Both are perfectly fine. Okay. But sellers will be more panic here. Here also they will be panic anyway. So this is very close to at the money. So here also they will be, there will be big move. So let's see this one. So breaking VWAP, okay, 45,700. Now look at this. You can see here clearly at 12.9, you can see the breakout. Let's look at 45,700 also. Here the breakout is coming slightly later. But 45,600, I hope you got the logic. Why you are getting it earlier breakout? Why are you getting it earlier? Among these three, look at this. Understand this. See, I have this one straddle guy. This is non-directional. This is another straddle guy which is directional. But his direction is bullish. This is another guy. But his direction is bearish. Among these three, whom do you think will exit the position first? If Gamma Blast comes, sellers will exit out of this. So who will exit? This guy will have to exit because his view is bearish. So he will exit first. Understand, he will exit first. So this is where you will get the move. And now I have taken this strike price because this is where it is trading. So to explain that I have taken this, you need to look at what strike price it was trading when you are in the trade. Okay, so by this time it was trading around 45,700. 45,700 means you need to look at 45,600, previous 100. So I'm looking at 45,600. You can see the breakout. So from here onwards, you should be in a trade. You have got the straddle breakout. You'll get a gamma move. So with this strike price, you can look at this one which they are going to cover first. What will be the one which is covered next? That non-directional one will be covered next. Last will be the bullish view because we already have the bullish view. So his position is like that only. So I hope you understood. This guy will cover first the call in the money. Then non-directional guy will cover second, then directional. This bullish directional because it's already his view is bullish. He's expecting the move. So he already have a cushion of 200 points. But this guy don't have that cushion. He is having a bearish view. So he will first cover, then he will cover, then he'll cover. So when you look at the straddle, first you need to look at that in the money straddle. So 45,600 straddle is what you need to look at. You can clearly see the breakout. So in the last video, some comments were there. You're getting the breakout at some point of time by the time the move is over. That is because you don't know which straddle you need to check. See, if I'm, straddles can be anything, guys. It can be 700 straddle, it can be 800 straddle. That is a definition. If you look at 45,800 straddle, here the breakout may be somewhere here. Look at this, 1 o'clock. So, it depends on which straddle you look at. There comes the knowledge. That is very important. But the moment I got the breakout here, I will look at 45,600 because I know first these guys will try to cover. Then this guy will try to cover. Then this guy will try to cover. Based on that, you need to select the strike price. You need to take the trade. Okay. So that understanding need to be there. Understand straddle is not only ATM straddle. It can be directional, non-directional. It can be non-directional at the money. It can be directional, bullish when you go for put in the money. Bearish when you go for call in the money. Now breakout is there. Can you hold this call in the money strike? You can never hold this. So you will exit this first. So my first breakout will come there. First straddle breakout will come here. 45,600. You can get it at 12.9. Then comes 45,700, 800, 900. That is why when you look at this chart, you may look at this one and you will get the breakout later. Not here. Okay. So this is very important point. So I'm taking it slightly higher level. See guys, no one will teach you these things. You need this clear knowledge. You need a clear knowledge for this. Mentors won't teach you. You need to read the books. These are the knowledge that you can you will acquire from books. So what my trade today is a call. I have taken only call trade. Data was positive. You can look at OI data, trending OI, Bank Nifty. If you look at morning onwards, it was positive. Then even then slightly, though that directional change is there, but data is clearly positive, 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 positive all the time. You can see it is positive, 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 and from here onwards you are getting a breakout. Then 1 crore, 1 crore, 1 crore, 2 crore, 2 crore OI is built up. So there is no need to think about a put trade here. If you look at this, there is no, look at this difference in OI is what I look at, right? I have already discussed this. Or you can look at this overall sentiment. This is what you need to look at. Don't look at this small directional change. This is temporary. Either you look at this difference in OI or you look at this sentiment. So this bullish, 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 bullish. So throughout the day it is bullish. So you won't see any put trade in my setup. Okay, one strike price is traded, and let's look at the charges. It is very less. Just 1600 is the charges. Okay, so it is just 1% of my profit. So I hope you understood. I hope you understood about the straddle concept. I hope you understood about the straddle breakout, and I hope you understood why this gamma move work and other things. Okay, so everything is clear. So guys, okay, now the chart. Another chart. We have this chart also. The trade opportunities, the first 5-minute candle breakout, R3 breakout, from 20 MA breakout, from VWAP breakout. Then where is the entry? You'll get an entry once a breakout is there, the retracement to that level, R3 or this level, you can get an entry. If you miss that, you can get an entry at 20 MA. Okay, you can get an entry at 20 MA. This give an entry at the other setup, which is super trend. I'll just show you that this is another 20 MA entry. Okay, so 20 MA entry, 20 MA entry, retracement entry. So after the breakout, we are getting one entry here, another entry here, another entry here. I'll show you why you're entering here also in the other chart. So let's look at this one. Can you see this beauty? Beautiful entry here we are getting exactly at the super trend. Okay, so here we are getting a very good entry exactly touching the super trend. This is what I need, a touching and making a wick. Immediately after this I'll enter because my stop loss is just below this. So this is a breakout, a retracement. You got an entry here. I discussed this. This is 20 MA entry. We have a pivot also. We have this VWMA also. So this is the first entry. This is the second entry. I'll just show you in the other. So this is our first retracement entry. This is our second entry, 20 MA. This is our third entry which comes in the other setup, super trend. Okay, here. Third entry, here is our 20 MA fourth entry which we can see in the other setup. So we need to combine it together, guys. You need to watch all these together and you need to see along with this, with all these, what you need to watch? You need to watch the data. You need to understand the sentiment is bullish, so you need to look for bullish trades, and you also need to, considering it is an expiry, especially you need to watch the straddle chart. And straddle chart, I hope you understood which strike price is to be selected and why you need to select the strike price. I've explained different types of straddles also, because there is a myth that when I say straddle, what people think is straddle is about shorting at the money, call and the put. No, that's not the case. Straddle means we are shorting the call and the put of the same strike price. It's not necessary that it is at the money. This is same strike price, call and put. This is at the money, straddle. This is not at the money. This is straddle, same strike price, call and put. But here I am shorting in the money put. Why in the money put? My view is bullish. Here, this is same strike price, call and put. But here, in the money call, why I am shorting in the money call? My view is bearish. So this guy will get panic first today because his view is bearish and the market is going completely against his view. So first he will get panic. After that only he'll get panicked because he's already taken a non-directional view. He has some more cushion than this guy. He already took risk. He took a risk by taking a bearish view, so it is going against him now. Now it started going against him, this guy. So he has some cushion. So he has much more cushion because he already took a view that it is bullish. So he adjusted the position. Maybe call will be, getting into some issue somewhere here. So he have this much cushion also. Okay, only after this you need to adjust. That is why you'll see at 13.18, that's 118, you will get a straddle breakout for the next strike price. I'll get a straddle breakout for this strike price. Here I get the in the money strikes. I'll just show you why this 13.18 and why this 12.19. I'll just show you once again. This is the last time I'm showing. So here you see this is 12.9, right? This is in the money. This is the guy who will get panic first. And next, this one. So you'll see this at 118. Why? Because he has some more question. Because from here, market have to come here. Then only he'll get panic. Okay? So I hope you understood some more concept, and then if I go slightly more, then he will get some more time. The straddle breakout will come somewhere here only. You see 225, 24 here only, because he is getting more time. He already had a bullish view. He took a 46,000 straddle. Why is taking 46,000 straddle when market is trading at 45 or 45,700? He have a bullish view just like this. Just like this one. Because market is trading at 46,180, you're taking 46,400. That means you have a bullish view already. So you have no issue. Same way, when market is trading at 45,700, you have taken 46,000. He already took bullish view. So he is in safe zone. Can you see this? He is in safe zone. He is getting panic here only. But that's not much. Alright guys, thank you so much. I hope you enjoyed the video. I hope you got some benefit. You're getting some benefits. If you're getting some benefits out of it, let me know. I'll be very happy. So thank you so much. See you in the next video.